Good morning, good afternoon, or good evening. Thank you all for joining today's webinar, Transforming Client Lifecycle Management with the LEI. First, we'd like to thank you all during these turbulent times for joining, and we wish that for all of your friends, family, and colleagues are doing well during this extraordinary time. My name is Claire Rowley. I manage the business operations at the Global LEI Foundation. Myself and my colleague Bucu will be presenting today, and I turn to Bucu to present herself.
Thank you, Claire. Good morning, good afternoon, and good evening, everybody. My name is Burcu Menteşoğlu Tuncer, and I work as Business Relations and Policy Research Manager at GLEIF. I'm mainly responsible for preparing public consultation responses that GLEIF submits, conducting policy research, and managing GLEIF's globally important financial institutions relationship group. It's a great pleasure to be here with you today, and I would like also to thank BAFTA for giving us this opportunity. Thank you. Back to you, Claire.
Thank you, Bucu. So indeed, many thanks to BAFTA for providing the opportunity for us to give the briefing on the Global LEI System and the LEI today. On the first page of our agenda here, you will see we will provide a background on the Global LEI Foundation and the LEI. Bucu will describe some of the current and future use cases, and then we will dive into the focus of our discussion today, and that is legal entity identification and how the LEI can bring benefits for client lifecycle management. We will close out, Bucu will describe our call for action and opportunities for future engagement. So to start with a bit of background about the foundation and the LEI. I'll give you a snapshot of the Global Legal Entity Identifier Foundation and then describe the bit of the history and the governance structure. So we, the Global LEI Foundation, we are a not-for-profit Swiss foundation founded by the Financial Stability Board. We operate in a three-tiered structure, and in that structure, we are overseen by 71 regulators and 19 observers that participate in our regulatory oversight committee. We additionally have a board of 18 directors that are monitoring our operations. We are a small organization, so in 2019, our budget was just above $10 million US. We have 44 employees from 24 countries. We partner with 35 organizations for the issuing of LEIs. On the slide here, you see 34, but we will announce a new partner at the beginning of May. And at the end of 2019, we had almost 1.6 million LEIs issued all over the world. I'd like to provide you now a bit of information on the history and the governance structure of the system. The Global LEI System was born out of the previous financial crisis. In 2011, the G20 leaders came together and identified that one of the main problems that prevented reconciliation of risks and identification of troubles in the financial system leading up to the 2008 crisis was the inability to uniquely identify parties to financial transactions around the world. The G20 leaders commissioned the Financial Stability Board to investigate and to put forward a proposal for the structure of the Global LEI System. The structure that was ultimately recommended by the Financial Stability Board has three tiers. At the very top, we have our Regulatory Oversight Committee. As I mentioned earlier, this is 71 members and 19 observer organizations from around the world. And this organization is responsible for the policy of the Global LEI System. An example, about 9 months ago or so, the LEI Regulatory Oversight Committee concluded a policy for fund relationships and how these should be represented in the Global LEI System. After that policy is concluded, it then comes to us, the foundation, and our partners for implementation. And you'll see that on the next page. This is a demonstration of the legal structure for the operational pieces of the Global LEI System. You'll see here on the left side of the screen, the GLEIF, the foundation, and we are connected to these LEI issuing organizations. We also refer to them as LOUs, local operating units. The LEI issuers are responsible for providing LEI services to registrants or legal entities. They bring the local knowledge to the system. Every LEI issuer goes through the accreditation program, which is a rigorous 9-month to 1 year, depending upon the organization program, where we ensure that the operational, technical, legal integrity of the organization is fully aligned with the expectations for the global LEI system. All of our LEI issuers enter into a master agreement with us, the foundation, and this ensures that the LEI services that are provided to legal entities around the world are consistent and are monitored daily by us, the foundation. This master agreement and the entire framework for our operation is public information, and it can be found on the website of the foundation. The same master agreement has been signed for all 35 of our partners, and that is the structure for going forward. So these LEI issuers, they play the role of connecting to the registrants and providing the LEI issuing services. They provide back to the foundation on a daily basis the LEI reference data. We, as the foundation, we publish that information to our website, and we make it available free of charge to all types of different actors, and you'll see those on the right-hand side of the slide. The LEI reference data is accessible via terms of use, but this is free and open public data for any user. I'd like to turn now to the Legal Entity Identifier itself and give you a brief overview of the LEI. The LEI is a 20-digit alphanumeric code that is based on the ISO 17442 standard. It connects to key reference data that enables clear and unique identification of legal entities participating in financial transactions. You'll see from the image on the slide the type of information that is associated with the LEI. So we have the basic business card information, for example, the legal name, the address, the legal form. And we also have information on direct and ultimate parent information. So the reference data pool associated with the LEI answers 2 questions: who is who and who owns whom? You will see here a demonstration, some screenshots from our website of what the LEI reference data looks like. In this case here, we have provided a demonstration of Nestlé, and you'll see the basic business card information in the middle of the screen. And then the 2 boxes towards the bottom show you those direct relationships, and then the embedded structure and hierarchy of relationships from subsidiaries, etc. All of this information is made available on our website. It is accessible either as a full file download, API, or the individual search, and you're seeing the results of an individual search here on the particular screen. I'd like to take a pause here and mention to all participants that we welcome questions throughout the entire presentation. You have the opportunity to raise questions via the chat box, and we will address all questions at the end of the presentation. So with that, that concludes the bit of background information on the Global LEI system and the LEI, and I will turn to Buchu to go into some of the current and future use cases.
Thank you very much, Claire. In slide 12, you see a number of regulations requiring the LEI in regulatory reporting from United States to China, from European Union to Mexico, from Mexico to India on a very global scale. Regulatory framework for LEI reporting, as Claire mentioned, has developed at the aftermath of 2008 financial crisis and due to difficulties in identifying counterparty data. Now, as of today, more than 100 rules published in Financial Stability Board jurisdictions referring to the LEI, and the LEI, for instance, is mandatory for OTC derivatives trade reporting and securities reporting in most of the FSB jurisdictions. In some jurisdictions, the LEI is also used in reporting to credit registries and for supporting the resolution of banks. In China, we see a completely different use case for the LEI, as Chinese customs use the LEI as an accepted identifier in import declarations from 29 jurisdictions. In this slide, slide 13, you see LEI's existing coverage and future use cases. Currently, the LEI is quite well covered in capital markets due to several regulations that I just mentioned. Therefore, our next target is to make LEI extensively used in payments, credits, in trade finance, and supply chain management use cases. Establishing the LEI in these areas will lead us to reach a significant LEI population worldwide, so LEI's benefits can be better materialized for everybody. With COVID-19 and recent developments at the global scale, we see that there is an increasing need in various industries for being able to identify who they are doing business with, who their customers are, and given today's business relationships are quite complex, global, and digital, we need a global standard for entity identification more than ever. It's ideal, of course, if the standard supports digital identities. We also have a parallel effort for establishing the LEI as a global standard in digital world, and I will provide an update about this shortly. We see from the industry support that extending use cases for the LEI is achievable and desirable for many industry organizations. For instance, the Payment Market Practice Group advocates that with industry adopting the ISO 20022 standard, it's time for industry also to adopt the LEI at the same time. The group advocates that the LEI would bring greater speed in payment processing time, being a data connector among diverse range of data sets. And since the LEI data is structured, it can support use cases of artificial intelligence, machine learning for financial crime compliance. Another support is from International Finance Corporation of World Bank. IFC emphasized that the LEI can be used in correspondent banking relationship and can enhance the KYC profiles of the respondent banks vis-a-vis correspondent banks. This would definitely help to minimize the risking in many jurisdictions that we face today. Asian Development Bank, from another corner of the world, pioneers for LEI to be used in trade finance. ADB suggests that the consistent use of the LEI in trade finance can help trade financiers to validate the identity of potential clients, overseas counterparties, and service providers, so to reduce the commercial risk as well as risk of fraud, money laundering, and terrorism financing. Trade financiers can also use the LEI for reducing fraud at transactional level, such as better deducting duplicate invoices by associating the LEI to each financing request. The LEI can also clarify the link between trade finance mechanisms such as documentary letters of credit and also specific parties. Lastly, in this section, I would like to provide an update on GLEIF's work in digital area. First is our work in digital certificates. Within GLEIF's 2018 annual report, GLEIF's LEI is embedded within the digital certificates of GLEIF's signing executive officers. This is the first annual report connecting the role of the signatory to an organization through the LEI. So you might ask, what is the benefit? Connecting the role of the authorized signatory and the organization provides reassurance that data is reliable and the information has not been tampered with regardless of the access point to the document. Deploying digital signatures, including that of the auditor, creates a whole chain of trust. The report is machine-readable inline XBRL format, so the elimination of paper is achieved with increased certainty and trust. You can save the link here in this slide and watch in YouTube later on how it exactly works if you're interested in. Our second piece of work in digital area is the use of the LEI in digital verifiable credentials. These credentials are interoperable, cryptographically verifiable, and facilitated by distributed ledger or blockchain technology. By leveraging the LEI within digital verifiable credentials, counterparties can more easily accomplish the tasks of identity verification, authentication, authorization, and digitally identify persons acting officially on behalf of a legal entity. In collaboration with industry and regulators, GLEIF so far has conducted 2 proofs of concepts, one in the United States and one in Europe. And through use of the LEI within digital verifiable credentials, regulators first were able to identify the legal entity associated with this particular regulatory filing. Second, authenticate that the legal entity is indeed who it claims to be. And third, confirm that the persons signing and submitting the filing are indeed authorized to do so on behalf of the legal entity. Here, LEI is the linchpin for creating this whole trust chain. I would like to stop here, and we very much welcome your questions. As Claire mentioned, please post your questions via chat box, and I would like to turn over to Claire for continuing with our next section.
Thank you, Burcu. And we will now dive into the heart of our presentation today, and that is leveraging the LEI in client lifecycle management. When the foundation was started in 2014, our first few years of operation were focused largely on, first of all, getting the operations in place and also supporting our regulators' different initiatives, as Burcu has described, involving the LEI. Starting in 2018, we desire to look bigger. So the mission that is put forth by the leaders of the G20 and the Financial Stability Board is a global system for legal entity identification of those involved in financial transactions. And to enable that, we need a deeper engagement with private sector. So in 2018, we started that engagement with a survey. We outreached to financial institutions based in the United States, UK, and Europe to understand better how is entity identification carried out in customer onboarding. There we found that on average, financial institutions are using 4 identifiers for legal entity clients. And this brings in several negative impacts. First is the inconsistent information. So reconciling the different reference data associated with those identifiers. And we saw that this also caused the financial institutions to worry about the reliability of the reference data that they maintain for their counterparty. This also leads to a drain on resources, as often this reconciliation efforts is manual and requires human intervention, which of course leads to delays. And we found on average it takes 6 to 7 weeks to onboard a new legal entity client, which is not a nice customer experience. And then lastly, there is heavy reliance on data that is proprietary, siloed, and non-standardized, leading to a lack of transparency in understanding who one is doing business with. So that was the findings that we gained in 2018. And that led us also to move forward with our deeper engagement with the private sector via McKinsey. In 2019, we conducted a study in engagement with McKinsey, looking into the business model of the Global LEI system and how to adjust that business model so as to provide the benefits of the Global LEI system more broadly for the private sector. McKinsey conducted a voice of customer interview exercise where they went out to certainly our home area, the financial world, but also into digital economy, supply chain management, and surveyed the different industries for difficulties in legal entity identification management. What McKinsey found was the top pain point across all these industries is the manual linkage of entity data across different reference data sources. That was quite a powerful understanding and also helped us to evolve our thinking of where the LEI brings the greatest benefits for the private sector. when the Global LEI system was first invented, and there was a lot of discussions amongst the different regulators, amongst the FSB, also extending into banks and financial institutions, there was an idea that perhaps the LEI would replace existing identification systems. Well, as we got deeper into our discussions with various industries and private sectors, we understood that the value of the LEI is not so much replacement, but rather acting as a bridge linking across multiple ID systems. And we've heard often from these voice of customer interviews the term Esperanto, that the LEI could serve as a link across the identification systems rather than a replacement. And thereby it would allow users to receive many of the benefits associated with the Global LEI system. So you have the open public data that has a rigorous data quality program applied, reliance on a global ISO standard rather than internal and proprietary identifiers, and also leveraging the links to other identification systems that already exist today, for example, to the BIC code or to the ISIN for securities. Furthermore, McKinsey then took a next step to investigate more deeply the business model and ask the question, where could the Global LEI system bring the most benefit for industry participants? Here, McKinsey identified our home area, and this is the financial industry. Specifically, they focused on the customer onboarding. They estimated that in total, financial institutions or banks are spending $40 billion annually just on customer onboarding routines. By leveraging the LEI, this could bring a 5 to 10% cost reduction or a cost savings of $2 to $4 billion. And that cost savings would come from the enhanced efficiency of relying on the LEI. So first, the LEI would reduce duplicative data entries and improve data access across internal systems. So as I mentioned earlier, where before there is a reliance on 4 different identifiers and reconciliation across these different data sets, rather using the LEI to connect and then being able to eliminate the manual reconciliations between these data sets. And then the additional gain in efficiency would be eliminating manual data lookups and enabling straight-through processing through to external data sources. So you will find that in almost any major financial vendor product, the LEI is already provided as it is needed for risk monitoring and compliance reporting. And by simply leveraging that hook into the vendor product, there could be significant cost savings by eliminating manual procedures and enabling that straight-through processing. And what McKinsey emphasized was by using the LEI at that very first touch point with the client and starting the relationship with the client by using the LEI as identifier, the financial institution has many downstream positive impact in the general client lifecycle management. So once the client has that LEI associated, the LEI is a lifetime experience. It does not change over time. And it can follow the client across its different business transactions within the financial institution. It can help with activities such as risk monitoring and understanding the profile globally across the institution, compliance reporting to different regulatory authorities, transacting and billing through a globally unique identifier, and of course the regular Know Your Customer refresh and repeating many of those procedures that were carried out in the initial onboarding. On the next page here, you see an overall graphic of client lifecycle management and where LEI issuance would start the benefits. What McKinsey found in their surveys and specifically with the financial institutions, the LEI is already a well-known identifier in financial institutions. However, it is often just used for the regulatory reporting and compliance function. Rather, if the LEI were applied at the very beginning of the interactions with the legal entity or business client, This could transform the way the client profile is built and enhance the efficiencies. What Burcu will discuss in the next few slides is embedding that LEI issuance, as you see in this diagram, at the very first steps of that client lifecycle management, when the client is making the first contact into the financial institution and that onboarding is completed. I will turn over now to Burcu to go into more detail.
Thank you, Claire. In this section, I would like to share with you, as Claire mentioned, our recent ongoing project with financial institutions called Validation Agent Framework, which would allow financial institutions to use LEI at the beginning of onboarding stage that Claire just demonstrated. The aim of this framework is to incorporate banks into the Global LEI system and leverage banks' business as usual procedures in entity onboarding. After our several discussions and engagements with various financial institutions, we understand that today, as part of the customer identification program, all financial institutions do some basic checks, such as the legal entity name, business register information, authorized signatory, headquarter address, legal address, branch information, subsidiaries, and ownership information before they onboard a new client organization. Of course, it's just a small part of what financial institutions do during and before the onboarding process. With the validation agent framework, we think that banks can leverage their existing KYC procedures, and at the same time, through partnering with an LEI issuing organization, they can also issue an LEI for each onboarded new client organization. Of course, we are aware that banks have a more broader set of tasks and checks as part of the client onboarding, such as reviewing sanction lists, obtaining beneficial ownership information, industry or sector classification, and so on. In Global LEI System, currently, before issuing an LEI to a legal entity, LEI issuing organizations exactly do what banks do here in the middle section. Here you see the intersection of these tasks in the middle column. However, given there is a duplicate effort, we are suggesting that banks can simply leverage their existing business as usual procedures and cooperate with the LEI issuing organizations for performing the technical part, the part that you see in the left side. LEI issuing organizations can support financial institutions with performing check for duplicates and check if this legal entity has already an LEI in the Global LEI system or not. And LEI issuing organizations can support banks for managing challenges, issue ISO 17742 standard compliant LEI, and published LEI records to GLEIF on a daily basis. And some of you might ask, why should I do so, although it's simply leveraging my business as usual processes? Why should I get involved in this? Here, as you can see, financial institutions have four major benefits for adopting the LEI widely and making the LEI as part of their onboarding processes. First benefit is the customer satisfaction. Banks offering the LEI to the legal entity actually take away customer burden to submit data both to the bank and the LEI issuing organization at the same time. You know much better than us, customers are loyal to where they put their data, so customer retention should be high in banks offering this LEI service to their clients. Second benefit is faster onboarding for the client. As Claire demonstrated through the findings of the McKinsey study, using the LEI as a data connector between internal and external data sets translates to 7 to 15% of reduction in hours per onboarded customer. A third benefit is the compliance. For AML, KYC, and sanctions violations, global financial institutions have paid over $36 billion in fines since the financial crisis in 2008. Probably more important than these fines is the reputational costs. Given clients' LEI is required as a required data field in many regulatory reporting files and also for suspicion activity reports, using the LEI as a primary key would help to reduce false positives in AML alerts and give better visibility to the bank for the entities in question. For benefit is the reduction of costs. Claire also mentioned that wider usage of the LEI by the financial industry means 2 to 4 billion US dollar cost savings due to generated efficiencies. We can create efficiency in transaction chains by increasing straight-through processing and so reducing costs through interoperability of the LEI. In overall, a strategic approach to reference data management will reduce operating costs and improving risk management and compliance for banks. We also know that banks are rightly sensitive about disclosing their clients' data and also their association with these clients to their competitors. Therefore, you can ask when the financial institution will date the client data and pass this information to the LEI issuing organization, if this financial institution's information will be visible as an open data in Global LEI repository. Well, the answer is short, and it is no. No bank information will appear on the LEI record, and the managing LOU field will be populated with the LEI issuing organization that bank partners with. Even GLEIF will not know which LEI record is validated by the bank or the LEI issuing organization as today. And for testing this model through short-term pilot projects, we are looking for volunteer financial institutions. In case you're interested in, we suggest a 7-step approach for our engagement with financial institutions with you. First, we will be signing an NDA, non-disclosure agreement, with the financial institution, so we can exchange documents more comfortably and we can speak rather easily. Second, we will be agreeing on the commitment statement. This is a mutual commitment document from our side and your side that we align and commit for sparing time and human resources for the completion of this short-term pilot project. Third, we introduce GLEIF standards, processes, and requirements in dedicated sessions. We go through each and every GLEIF service together, and this will create the basis for the next step. The next step is the 4th step. We do a gap analysis between the client identification process and the LEI issuance process. This is a very important step for the bank to take over and clarify the gap between these two processes. But as I mentioned before, actually, our experience and our engagement with financial institutions so far demonstrate that this gap is rather small and minor. Next, the LEI issuing organization comes into the picture, and the financial institution and the LEI issuing organization agree on which tasks to be undertaken by financial institution and which tasks to stay with the LOU. And the last stage is a walkthrough demonstrating that the financial institution and LOU cooperation works well. At the very end of the project, we expect financial institution to issue LEIs for several entities in collaboration with the LEI issuing organization. And here I would like to highlight that for the pilot project, we do not expect a deep investment or technological upgrade from participating financial institutions, but rather we aim to explore what technical, legal, and financial dimensions need to be considered while we leverage banks' business as usual processes. And lastly, I would like to provide brief information on the GLEIF's globally important financial institutions relationship group, in short, our GIFI group. Currently, we have members from 22 globally systematically important banks, and our members' scope is getting bigger and bigger. We organize regulatory update calls, project discussions, and other areas of mutual interest on a quarterly basis. So if you're interested in joining the group, please send us an email. You see Claire's and my email addresses in the slide, and we would be very happy to follow up with you afterwards. I think I can stop here now and turn over to Claire for starting our Q&A session.
Thank you, Burcu. We have already a few questions in the Q&A, and we do encourage for anybody who likes to raise a question, please feel free to put in the Q&A. We also have a few questions from our engagement with financial institutions already on the topic that we will share with you. But I will start first with the items that are in already our chat area. So the first one is regarding ISO 20022, and there is a question with ISO 20022 using the LEI in payments. Do you see the benefits of an individual getting an LEI? Can an individual get an LEI? So we do like to be very clear here. The LEI, it is a legal entity identifier. It is not intended for individuals. There is one small caveat, and if you take a look at the LEI standard, there is an exception for individuals acting in a business capacity, and these would be individuals that are, for example, registered in a local business registry or chamber of commerce. And generally what we see that is, for example, traders, and depending upon the jurisdiction, at times traders have to also register, for example, with the local chamber of commerce. That being said, I do like to highlight where Buchu mentioned some of our digital projects. So first, with digital certificates, what we demonstrate there is the power of the LEI being connected to individuals playing a particular role within the organization. So in Buchu's example of our annual report, we had the GLEIF CEO and chairman of the board sign digitally our report with their digital certificate. We also had our third-party auditor, Ernst & Young, sign the report. So we are, for example, right now, there is a ballot for the ISO 17442 standard, so the LEI standard, where we look to incorporate the concept of role to allow the extension of the LEI to identifying persons acting within an organization in specific roles. And then we are also leveraging this concept in our work with the self-sovereign identity management, or the verifiable credentials, as Buchu mentioned. So again, here you have the idea of a person or employee filing a regulatory document on behalf of the legal entity. And in the proofs of concept that we carried out, which involved regulators, one in Europe, another few in the United States, the proof of concept demonstrated how the verifiable credential contains the LEI as well as the role of the individual that is signing or submitting a regulatory filing, and that thereby enables the trust chain to be verified and traced back to the original issuer of the LEI. So indeed, the LEI itself is not intended as an individual identifier, but there are certain extensions of its application which allow for identification of individuals or persons that are acting in roles within a legal entity. And then I will move to the next item, and this is a comment that there is indeed a BAFTA working group that has developed a distributed ledger payment commitment that will accommodate the use of LEIs in trade finance. We at GLEIF, we are not familiar with that, but we very much do appreciate the initiative, and we certainly welcome contact to myself and Buchu about further details. That sounds very interesting and promising.
Absolutely.
And then perhaps we just address the new question that has appeared in the chat. And for this one, Buchu, I will turn over to you. And this is regarding the use of the LEI in ISO 20022, and specifically in the UK, is the LEI mandatory? And I turn to you, Buchu, to describe that.
Yeah, sure. Thank you, Claire. Thank you for the question. And actually, Bank of England is the first central bank in the world requiring the use of the LEI within the margins of ISO 20022. The implementation and the mandatory use of the LEI first is planned for payment messages between financial institutions. So financial institutions will be identified with their LEI as the first step, and it will become mandatory around 2023 timeframe. But Bank of England's idea is that for the next steps, all originators and beneficiaries who are legal entities should be identified with their LEI. We know that it's not a short-term project, but we really very much appreciate Bank of England's support for mandatory use of the LEI, and ISO 20022 was a great start for it. Claire, I don't know if you would like to add anything else on top of it.
I think that was very good. Okay. And with that, I will just raise 3 questions that we have frequently heard in our engagement with banks and financial institutions on the usage of the LEI and onboarding. And the first one is regarding the value that the LEI brings to the onboarding process. So in particular, certain institutions, they have pointed out, well, we still have to carry out the adverse media screening, the sanction list screening, et cetera. And Bucho, may I ask you just to highlight one more time here where the LEI, indeed, the bank is still having to carry out these types of activities, but where the LEI is bringing the value in the customer onboarding process.
Yes, sure, Claire. Here, the value is that you do not really need to make any changes in your own process because you're basically leveraging business as usual processes, and the fields that you already verify and validate, like company name, legal name, headquarter address, legal address, business registry information, authorized signatory, and so on. And the real value is that with the LEI being your data connector, you can easily connect your internal and external data sets. And it's a great addition, it's a great enhancement of a financial institution's data management capabilities. So once the client's LEI is obtained, before you onboard the client, you are very close to see the 360% of single client view. I think this is the real value.
Thank you, Bucho. I will raise just one additional question that has come from our frequent interactions with financial institutions, and then I see we have additional question in the chat. And the question that we often get when engaging with financial institutions is the difference in the refresh cycle. So indeed, in the Global LEI system, there is an annual refresh of the reference data required, versus in the client lifecycle management, the refresh cycle often depends on the risk profile of the particular client. And here we like to emphasize that indeed we recognize that there is this gap, but part of the pilot project's goal is also to explore what model makes the most sense for the financial institutions and also for the Global LEI system. From our engagement so far, we have some financial institutions that have said, well, as a matter of fact, we find great value in the annual refresh of this core reference data. So, for example, the operating status of the entity, its address information, and they've actually built in and updated their protocols such that this basic reference data around the LEI, it is updated annually, aligned with the Global LEI system. However, we have heard from other organizations that their KY procedures are quite strict, and there's not very much appetite to change. And this is where we are engaging with discussions involving the financial institutions and then also our regulators and our regulatory oversight committee to better align the refresh cycles. This is a topic that is of great interest also to the regulators in our regulatory oversight committee. So we bring any of the major issues like this to them for their policy consideration in the system. So indeed, this would be a topic that we look to dive more deeply into with participating institutions. And then I will turn to the question in the chat session, and this one I will turn to you, Bucho, to respond. So the question, it asks for some clarity from a practical point of view. If Bank A onboards a customer and performs KYC, does Bank, and then there is Bank B that wants to sign this customer, does Bank B rely on Bank A verification to perform the KYC? And I'll turn to you, Bucho, for a response to that.
Thank you, Claire. Yeah, this is a very good question, and this is a question we frequently hear from financial institutions. Actually, issuing the LEI during the onboarding process does not remove your KYC obligations, right? So, and regulators are quite strict on this, and they expect that although banks can do the verification and validation and issue the LEI in collaboration with LEI issuing organizations, you still need to keep doing your KYC procedures and perform KYC procedures here. We do not expect Bank A to rely on bank B's verification or stop performing KYC obligations because the legal entity is already verified by bank A. We know that there are some KYC utilities planning to use LEI as the key identifier, and maybe banks who join these KYC utilities might rely on each other's verification and validation, but in a normal world, in a separate individual bank relationship, we do not have such an expectation.
Thank you, Burcu. And then I will raise just one final question that we often get in our discussions with financial institutions. And then I also encourage, if there's any additional questions, please put them in the chat. And so the final question that I will raise is regarding cost. So indeed, for those of you that are familiar with the Global LEI system today, there is a cost that is paid by the legal entity for the initial LEI registration and then annually the renewal. Today, that cost is roughly around $65 US. And when we engage with financial institutions on the topic of embedding the LEI and onboarding, the feedback is, well, for certain clients, that amount of money is not much of a concern, especially considering the amount of money that we already spend simply on conducting the onboarding process. But if we are to extend the LEI more broadly across our portfolio, then cost becomes quite a big concern. And this is another aspect of the pilot project that we look to engage with the financial institutions and better explore. So we have three parties that are involved in the pilot project: the financial institution, the LEI issuer, and the GLEIF. Within the Global LEI system, there is a fee that is paid from the LEI issuer to the GLEIF. This is $11 US annually for each LEI that's issued or renewed. And then there's the fee that the LEI issuer charges to the legal entity. With the pilot project, we aim to investigate or experiment with both of these fee structures to see how we can bring down the cost to a price point that allows for broader usage of the LEI across the portfolio. We also like to highlight that, as Burcu has described in this model, we are taking out duplicative activities. So in today's world, you have the LEI issuer that is carrying out validation verification, and you have the financial institution doing the same activity. So by taking out this duplication of activities, naturally, the cost should come down. So we see this as we see cost reduction for the overall system, and therefore for the users of the Global LEI system, as a very important part of this type of engagement. Okay, and I see we have received one additional question in the chat area. And that is, some banks are already working with registration agents locally because this is easier for banks. Do you think the registration agents will be unnecessary in the future with the bank pilot project? And I'll turn to Burcu if you'd like to offer some thoughts on that.
Yeah, sure. Thank you, Claire. Actually, registration agent concept, in a way, was born at aftermath of the MiFID II implementation, because there was a huge demand for the LEI, and LEI issuing organizations' capacity was rather limited in responding on this big demand. And registration agent concept is relatively different compared to validation agent concept now that we propose, because with registration agents, most of them, let's say 90% of registration agents, just pass the information of the client to the local operating unit, LEI issuing organization, without really verifying or validating the data. But here, with this framework, validation agent framework, we expect banks to do the verification and validation and just pass to the LEI issuing organization for doing or for contributing to the technical part of the LEI issuing process. So this is the main difference. And registration agents, there are a few registration agents who are doing verification indeed, as you mentioned, but their number is not that big. And we believe that if this pilot project gets successful, we might see indeed some number of registration agents maybe drop in the future.
Yeah, and I'd just like to add to that, we certainly don't think that the registration agent concept goes away. So we believe that there's many different ways that financial institutions desire to engage in the global LEI system. As Burcu mentioned, some of them prefer their existing relationships, and especially the registration agent oftentimes provides a lot of services in local language that perhaps the LEI issuer is not an expert in the local language. So we see the two models will operate in parallel, whatever is the more desired relationship that the financial institution is interested in. And we have received a few additional questions. The first one is, will LEI provide relationship with other LEIs like the holding structure, parent company, sister concerns? So in the global LEI system, we collect information on direct and ultimate parent according to an accounting consolidation standard. This was a policy decision by our regulatory oversight committee. And they could choose, and they are actually, we understand, having discussions on if there should be some expansion beyond just the accounting consolidation definition. That being said, the data that you can find today in the publicly available data pool, it does demonstrate hierarchies. The way the reporting works is the legal entity reports upwards. So it reports on its direct and its ultimate parent. And therefore, it naturally allows complex corporate hierarchies to emerge. In the example I demonstrated a bit earlier of Nestlé, if you take a look at that on our website, you'll see that you can click into the embedded hierarchies. So if you have a subsidiary of a subsidiary, you can trace through that relationship. I do like to be absolutely honest. We know that it is not a complete corporate hierarchy. But it is the start of this information, and of course, as open and public data, it's a very good starting point then for further investigation. Okay. And then our last question here is on accessing to the presentation deck, and we certainly will work with BAFTA to make the presentation deck accessible to all participants. I take a pause there and just see if there are any final questions coming in through the chat. And we'll give just one moment in case there is someone typing. Okay. I do not see any additional items that are coming in through the chat, so I would like to bring our presentation to a close. We thank you very kindly for your participation and the lively interaction with our discussions. We hope you found this information useful, and please send an email to either Burcu or myself if you'd like to discuss further the engagement in a pilot project. We wish you all a wonderful remainder of your day and also good health in this difficult time. Thank you
all very much for your time. Thank you.